What a week with the government shutdown looming and then becoming a reality. Nobody cared. Gold continues to push higher. The question is, how much higher can it actually go? Bitcoin at an all-time weekly high, looking ready to push. What ASTS and some of these uranium names all have in common? It's a theme and most people are missing it. Tesla dropped 7% in a day on its release of deliveries. What is next for the company? Why everybody is still in love with uranium. We have a lot to go over here. As always, subscribe to the channel, click all notifications. What we go over here is extremely timely. Let's do it. Now let's start with the basics before we really dive in here, because there is a lot to go over, obviously. I do think it's important to note that on the week, we really just blew off the government shutdown as if it was no big deal. And we could just see the reaction right in here from Friday and Thursday. And it's kind of interesting, really, because once we closed over, and I do get into this level of detail, but once we closed over, we never really got below a close of that level. And I'll show you what I mean by this. So if we blow this up and then just drill this across and just drop a simple line from that close over, you'll note that, yes, we got below that, but we never really were able to close for those 2 days after the closure of the government below that. Now, mid-October is when the military will be paid. If we do not pay the military, this is when it starts getting a little iffy. So just be aware of that this will last for a period of time. But if you get into that 2-week stretch, this starts to become a real issue. It doesn't matter what side of the aisle you're on, it becomes an issue. Now, if we look here, we're also holding this previous break. So we've broken out, we've come back down, we retested the previous level, and we've been found to hold. The easiest thing to do when people look at these little levels is to understand where this is telling us that we could go. And there's 2 things here that happened this week, but let's just start with the basics so that you can do this for yourself at any time. What you tend to do with these kinds of breakouts is you take the top of that breakout right here, and we'll put the magnet on because the magnet allows us to just drop that line. And there's our 50% line, which is not a fib, but I use that regularly on this channel, and I use it in my trading a lot. And it's a great demarcation line. And what this is going to do for us is just give us an understanding of where all the players are. And we'll get rid of the 50 right now. And then what we're going to do is drop the first area where the fib is telling us the Fibonacci level where we could have as a target. And that takes us up to that 6,800. Now, as we all know, the recent expiration that happened last week with the big OPEX and the quarter, why do you care about that? Like, why do people truly pay attention to things like that? And there's a reason for it. You want to understand these huge collars that are out there so that we can see where those collars are, because it tells us what people are thinking. A collar is obviously, for those that don't know, is where somebody is selling a call option up here, and they're buying some kind of put spread down here. The biggest one that they put on usually is JP Morgan's, and it was just somewhat interesting, and I'll just show you where it is. So they're suggesting that you're not going to break that low by the end of the year, and they're suggesting, I think it was 69.50 is where they sold their calls up here, and I believe they got 68 for it. So if you take 69.50, just to put that in perspective, and they get 68, they're assuming it's not going to go over 7,000 by the end of the year, and they're assuming that you're not going to break here. So if you think about it from that perspective, they're saying that they think you're wedged in. I tend to agree with that, barring some kind of major event, and I'm not really sure what that major event would be, but I thought that this was helpful to just kind of understand the lay of the land before we start looking at this from 34,000 feet, because there's a lot of really definable trends that are developing. And I don't think that people are truly understanding how long these trends can last. And that becomes a real issue, because once you define the trend, you want to stay in the trend. The trend is your friend until it breaks, right? I think the saying is the trend is your friend until it ends. If we look at it, look where we touched in April. And then from there, we just rocketed. Okay, so how many lower low weeks have we had? Well, one, okay, since, we had all our winning and liberation in here, and then we had the lower low week here. We never really undercut that, did we? And then we all got scared in here, end of July. Ooh, it was a bad day, a bad week. But have you really had anything in here? Now, this is really important for people to get. Despite what you're hearing on the news, despite what you're seeing on social media, And this is why I tell everybody, I haven't said it in a while, so I'll say it again. You need to cull your feed. In other words, the stuff that you're listening to, you need to be really, really careful. Even if you're listening to this and you're finding out, hey, this is affecting my trading in a negative way, you stop listening. You need to look at what's actually happening and what's adding value to your investing and trading and your information and education. That's what I always tell people when they watch these videos. This is information and education. That's it. It's up to you to make the best decisions for you. What I try to do is give you tools that I've used over 26 years of trading and then go from there and try and make them your own and then replicate them. I find taking that way of looking at the world extremely helpful. So if we're looking at our levels here and we looked at this, well, tariffs are bad. This is bad. That's bad. The wars are bad. Everything's bad. We've had one lower low since this happened. Two, actually, right? Even this breakout, you could never take it out. And all this was a retest of the previous level. So when we really look at this, what's going on? Well, you have some things out there that are definitely an issue, and we know that. We should cover some of those, but just so you understand it, yeah, it's not great what's going on with the labor market. It's an issue, but they're cutting rates into an environment where we have what? Increased productivity. And why are we having increased productivity? Because we're getting new tools. So just for a really quick resnap, when was the last time that we had increased productivity and they cut rates into that? The last time that we had increased productivity and they cut rates into that was July and February. This time frame right in here, Greenspan cut rates. We had something coming out called the internet. They were faxing us at the time, telling us all about it, for those that remember fax machines back in the day. And what do we have here? This really tight. And why do we have this tight grouping where we're just going higher and higher? Because earnings are getting better, which earnings right now, believe it or not, whether you think they are or not, they're getting better. They're not getting worse. And then we look at this and go, all right, well, earnings are getting better, okay? And they're decreasing the cost. Now, this is where it gets super interesting. And I don't want to go on too many tangents because we have a lot to cover. But we could take a look at the dollar and how the dollar was getting weaker and taking out lows. And everybody was worried because the dollar was at 78. And that's bad, right? In 92, you can see this. 94, we're rallying back up. And then we're collapsing. I mean, the dollar absolutely collapsed from 100 all the way down to 80. And that is an enormous drop, right? I mean, that is definitely something that would be on the radar, a 16% drop in the dollar versus other currencies. And then they start cutting rates. And then what happens when they start cutting rates? Dollar starts going higher. So if we kind of take a look at today's events and we start looking at what we're seeing out there, we can see these areas, and then we can see in here, and we can see this drop. And then if we went here and just looked at this from the 110 down to 97, and we could see that that drop was about 12.5%. It's not the full 15%. You have the exact same scenario, or a very similar scenario, I'll say it that way, to what you had in the 90s with the dollar. And then what happens? The dollar starts picking up steam, the dollar starts moving. Well, that's not going to happen because this is going to happen and that's going to happen. You don't know what you're having for lunch on Tuesday, let alone what's going to happen to the dollar. So all we really have is past performance. If you want to know what you're having for lunch on Tuesday, go look for what you had for lunch last Tuesday, and there's probably a pretty good chance you're going to be eating the same thing. So when we look at past performance, we get a good understanding of where we're going forward, right? That's why past performance is the best tool that we have. It's not great. Let's be clear about that. But it's the best we have. Now, let's start getting into the details because we have a lot to cover, and it'll really show you where they're putting the money. And then you'll be able, by the end of this video, to be able to do this for yourself. And as always, subscribe to the channel, click all notifications. Let's get to it. Now, some of the comments that I'm getting are great comments, and I really appreciate the comments. I read every single one of them, even the ones that trash me. And keep them coming because it does help me make the channel better. What I got a lot of was follow-up, and I get that. So we're going to do more follow-up on this channel on when I show some of these tools and how to use them and how I use them and what they're telling me. And it's almost obviously like telling a story, and people seem to enjoy this. So let's get to it. But in front of you is the S&P 500 50-day moving average percentage and the NASDAQ 50-day moving average percentage. That is below. I left this on so that you can do this for yourself. And it's simply S5FI divided by NDFI. So right here it is. And all you do is go in here and you type it in here, and then you're going to get this, turn it into a line, drop it in, make it an indicator. I'll probably do a video start doing videos on trading view and how to do some of this stuff because it's a very great, very good tool to utilize. Anyway, if we look at these levels and we can see how this is going, right? We could see this pretty clearly and how things are shaping up. It's pretty obvious to me anyway. So why do you care about this? You care about it because when the S&P on the 50-day is outperforming the S&P or the NASDAQ 50-day, I'll say it again. So when the S&P 50-day is outperforming the NASDAQ 50-day on a percentage basis, percentage names above, you're usually going to come in pretty hard because there's more defensive sectors, right? Versus more growth sectors. So those peaks tend to mark bottoms. And if you look across the board, you'll start to see this. I can't stress this enough that that's usually a really good sign that you're pretty much got a bottom in. Now, what you will notice about this is the movements higher tend to focus on what's happening. So these movements higher tend to focus on what's happening. What's crazy to me about this is that when you're seeing it, we're blowing it off. So the fact that we're blowing it off is not saying that this is not a bottom, but it's actually telling me that we're probably going to ramp up. That's how I read this. And you can go back historically and look at this over time, and it will clearly mark, like here's April 24, it'll definitely mark these bottoms. But what I always found so fascinating about it is people will look at it relative and they'll say, oh, well, it's not working. No, it did work. I told you that this is the bottom. You just didn't get a drop. And the fact that you're not getting that drop is more of a signal than a non-signal. And that's where I think people start to lose it with these kinds of indicators. So that's how I take it, like, hey, no, that's it. That's all you're going to get. And here we go. Now, if you really look at it from 64 to 67, that is a bottom. It's just not as prophetic as we would have liked to have seen. It is what it is. We have to take what the world gives us and move forward, right? We just have to play the hand that we're dealt. I do want to go through this again because I got asked about it again, and I do think it's important. In front of you is the NDX. And this is the NDFI by itself. And the one thing that I was saying with my crude-like DTL downward trend line and marking off these 50-day breaks, meaning 50% over, 50% under. So when you're under on the 50% or you go over on the 50%, it tends to mark areas of interest, as you can see here. So I'm just going to leave that up. And of course, pardon me, I could just drop another one in here and we could see that real quick. Let me just grab the vertical line. Find it. There it is. Yay. And we'll just drop that one in too so that you can see it right in here. And then when you broke above it, that was pretty much it. When you break down below it, that's all we're getting. But what are we doing right now? We're breaking what? Above it. So you can look at this and say to yourself, oh, well, we're too high. I don't even know what that means. Like someone's going to say to you, oh, we're too high. What does that mean? I don't understand what that means. It doesn't make any sense. It's going higher. Like all of a sudden, people expect to hit a valuation level, and that's going to be it. If the earnings growth stops, that's when you have a problem. Until then, you trying to predict that the earnings growth is going to stop, I wish you the best with that. I've watched people lose fortunes over that, more so than lose fortunes over putting money to work in risk assets, was the idea that you knew when it was going to stop. It just doesn't work that way. Some people will get lucky and then they'll get on TV for a year and then they try and do it again and then you never hear from them. So if we're just looking at what's playing out, because what you have to do is trade what's in front of you, not trade what you think is going to happen. This is what you have. So just play the hand that you're dealt, move forward. It's a lot easier. If we see this breaking above that 50 and you're going over 55, well, that's an indication to start putting money to work in the NASDAQ. I mean, if we really look at it, this is where you start putting money to work. People would say, oh, well, I had the opportunity to buy here. Okay, maybe you get that again in this area. And just so people will feel happy, we'll drop that line in there and make people happy so they can see that one as well. Maybe you get that retest of that area. And it's not a coincidence that this break in here led to a retest of that area in here before pushing higher and grinding. And it's not rocket science on any of this stuff. So I really think just keeping it basic and saying, hey, we flipped the 50 on the NDFI and we're breaking that DTL. Clearly, we're broadening out in the NASDAQ. You might not like it. No one cares what you like. You're looking at this and this is what's happening, and you can either profit from it or not profit from it. That's entirely up to you. It doesn't mean that there's not some event out there that could shake us, but right now, this is what we have. Now, in front of us are 44 sectors. And what I'm showing is just looking at what happened on October 3rd. And I like doing this in smaller snapshots so that you can just kind of see that day where the money's going. We can always go back and zoom out, and I'm more than happy to do that. But if we really take a look at where the money's going, we can see it through here so that you're going into the utilities. You can always just type these in to see what they are, but you have med devices, you have the quantum names, you have healthcare, you have biotech, you have gold, and we're seeing these names move higher and higher. I don't see semis this day. And we're going to get to that in a little bit because you have your micro moves and your macro moves. But what is this really telling us? Well, here we're seeing that they're definitely buying drone names. There's no doubt about it. I really like looking at this because it just tells me exactly what they're buying and what they're not buying. And we can see the zero line down here, meaning where they zero out. But if we just look at this it's not really what you think they'd be buying. I mean, I don't think a lot of people really thought drone names or utilities were going to be the hot commodity. Maybe you would have thought quantum, but biotech or some of the mining names, I thought that was pretty interesting as well. For last quarter, from looking back from the June 30th date over, I thought this was pretty worth our time as well. The pot names have just been on fire, obviously. And then you can obviously see PWB, XME, gold, and even solar, which is just fascinating. But what are they really worried about? Like, if you really had to think about this, like, what are they really saying? Well, you have the spec with with the pot heads. And then other than that, you just look at really what you're dealing with is power. Everything about this, if you really had to think about like, what are they really buying? They're buying power. And PWB, the TAN, URA, NLR. I mean, yes, they're buying gold too, and you can see the gold miners in here. But what is if you really had to think about the theme that you're seeing here, it's power. They're trying to get power. I think that's super important to get. And so I like the smaller time frames, taking a step back and going over the quarter, what was the thematic movement that we saw? And people could say, well, the pot names. All right, cool. Maybe they pass some kind of law. Maybe they don't. Maybe, Trump posts another, GIF for us on Twitter and we're going to get all giddy about it. I don't know. But I do know that they're buying power. I do know that UFO is drones. I do know that. And so that if I can find that theme, I can then start looking into that theme relative. Remember, everything that I do, and this is how I trade, and there are several different ways to trade, but everything that I do is top down. I find that to be optimal, and it's just how I was trained. And top down means that I go index, sector, stock, where someone might just look at a name and go, oh, I'm going to buy that name because this is going on and the option flow is this and that's this. I have made better decisions and more money over time following the trends. If I can find out where the trend is, that's where the money's going to go. That theme is where the money's going to go. And I think this is super important because if I look over this, yeah, the semis are great. Semis are the cat's pajamas. They're up 18% on the quarter. Fantastic. If I really take a look at this, if I'm buying nuclear instead of semis, what am I making? 2x the money that went into semiconductors. So does it make sense to buy semis if I'm trying to figure out what to do? Let's say that I was just interested in the hedge. Gold's up 3x what semis are. So this really puts it into perspective. You also have to take out the speculative excess. To me, MJ could be up 100 or down 100 depending upon somebody tweeting. So I always look at it and go, do I really want to put that much capital at work for something that is a spec play? I do think that there's some laws passed there because they want the revenue stream. It's very clear that, the intention here is to increase revenue. Now, let me show you how I look at the world and then how I make decisions on where these themes are going. And then you can do this for yourself. And we're going to go through a bunch of these. And I think it'll be super helpful for you to look at this, not only on a relative basis, but to understand what's really going on. So if we look at the semis, and of course we go through July, everything's going to be a disaster, never going to make another chip again. And then we got, that big piece of cardboard. And then after that, April 7th, we got halted on the cardboard and then we just went higher. Okay, cool. So since then, we've broken out. And so what I tend to hear now is the words, oh, I missed it. Well, first off, there's nothing about this that you missed. There's nothing here that would suggest anything about missing anything. And I think that that's a really important place to start. If we look at the RSI, people say, well, you're over on the RSI. That is very true. This is a weekly chart. If you look at when you break over this level, that you could stay over here literally for months before you even consider having something that would roll over, and you just popped over. But more importantly, what we do is we tend to want to look at this on a weekly basis or a monthly basis for long-term ideas. And this is where I see people really getting caught up in the minutia. Define who you are as a trader. If you're day trading, great, day trade. If you're swinging, swing trade. If you're long-term, long-term. What I find has worked best for me over all this time in doing this and getting my teeth kicked in for decades is real simple. If I can determine the longer term trends and then trade either day or swing in those trends, I do significantly better. And so you'll see me trading on a daily basis, something like a NVIDIA, even though I have a long-term position with it, or day trading, like SkyT we did the other day. I'll walk through that if we have the time, where we paid like 14 or whatever for it and went to 20. Why? Because of the thematic moves. Understanding that trading in those sectors is how you wind up profiting. Now, if I take a look at this is the SOX versus the SPY. And I do want to get into the cloud. I do want to spend time on this today so that you can see this. But what I'm doing here is I'm taking semiconductors and I'm dividing it or looking at it relative to the SPY. And I don't care if you use the SPY. I don't care if you use S&P. I don't want to use the NASDAQ because I just don't want to look at tech. I want to look at the entire world going on around me and saying, what is going on? Because the S&P is going to encompass not only tech and biotech, but it's also going to encompass everything else that's out there that's defensive. So when I look at this, it is very clear that you are far, far from taking out highs and that you are frothy. Now, when we look at the difference of this over time, you can see that you had periods in time where you grossly underperformed and then broke out. So if we go back to something like this last big breakout down here in the SOX versus the S&P, we tested in April 19, pulled back, and then obviously we had the pandemic that came down, and then we had massive outperformance. For years, you had massive outperformance over 2 years before that kind of topped off in December. And then we had massive underperformance, obviously, and we can see that, right? So then we broke out again right in here, and we could see that breakout, and that breakout failed May 23rd, pushed through December 23rd, and then we had massive outperformance for a solid, I would say, year there before we come back down to earth, and then all of a sudden we have this. Now, what I think super important about this is if I go and put on the cloud, and I can take some of this off and put it back on, it's fine. What I get about this, and I'm going to leave it all on for a second, just kind of walk you through it. When you start breaking the lagging, which is the green, and maybe what I should do with this so people don't get confused is what I'll do is take this all off for a sec, and then we can just go back to it. But let's get that off for a second too. So when I break the lagging, you usually tend to have an issue. So if you break the lagging to the downside, that usually means, hey, you probably want to stay away from it. Now, it takes a while for you to actually break it to the upside. So I'm not really that interested in that, but if it does happen, it's always a good sign. But if when you break this to the upside, you want to pay attention. But if you break it to the downside, the lagging, you usually just stay out of the way during those periods of time until you get other indicators. And I'm not going to do the whole video on this, but yeah, that's a sign. Now, if I go and take a look at the blue, the conversion line, you'll note that that is pointing up again right in here. And I think what we're going to have to do with some of these is make them a little brighter. The baseline, if we go and take a look here, turn that up, and let's make that another color. Maybe that's a little bit better, a little bit brighter so that you can see it. So these flips are also super important, but what we're doing is looking at this on the weekly. Now, then we put the leading spans back in, and then what we're going to do is just put the background back in with the cloud. Now, what I'm going to do next is I want to take out all of this, but I just want to show you a couple things that are super important. If we take a look here, you can see the blue is through the cloud. I'm going to use weeklies. You could do this on monthlies as well, but we're going to use weeklies. If I'm parking through that and I'm in this, it's not great. I don't want to just be sitting in there. What you'll note about this, and I'm going to take the lagging off now so that we don't get distracted. What you're going to see about this, these turns, these crosses are super important. Those crosses that are in here, and you can go spend time in this. My most popular video is actually this cloud video from years ago, back in the day. But if we're looking at these crosses, yeah, they're important. But this movement over is happening 26 weeks before these crosses are happening, 26 out, no matter whether you're using weeklies or dailies, before this even happens. So if I mark that off, you're around 27, this is what you're looking at that day, and this thing's crossing. So when this is crossing here, again, what you're seeing is here's that cross, and you're looking at when this is happening. It's actually further out. It's right in here. That's super important to get because that changes the cloud. And of course that these crosses are tied exactly to this. So that, when the conversion, the base. So just FYI. Anyway, so what are you doing now? Well, SOX relative to the SPY is breaking out of the cloud and you're crossing here. And this is starting to point up. So if you were to look at this, you had a period where this was actually pointing down. So this is actually telling you that semis are ramping up, not that they're coming down. And I think that this kind of just taking a snapshot on what's going on out there is super important. So you could see your cross, and then you could look at something like this in the past and say to yourself, well, what happened here in the past? Was this good? Was this bad? Well, this turned out to be pretty darn good because you flipped in here and then it took months for this to finally flip back over. And you had a massive move once this popped out. So you really want that base and conversion to pop through the cloud, and you're not even there yet. So we obviously want to monitor this. But when you see these kinds of situations where they're popping through, this can go on for a very long period of time, and it's just getting started. And we can do this repeatedly. And what we're doing it with is we're doing it with different sectors, and we're doing it with the relative of those sectors to get a good sense of this. One of the things about gold, and a lot of people are looking at this from this break, And we went over this over a month ago, and I said, hey, if this breaks 318, I actually did it publicly on this video, on Saturday's video. That's why I always tell people to subscribe, because we get pretty specific here. But if you broke out here, it was pretty clean that, the governments out there, the central banks, were still going to be buying and buying very aggressively. And that's exactly what they're doing. They're still buying gold very, very aggressively. And there's really no end to this. As a matter of fact, you're getting these gap ups that are going on there. So clearly we're overextended on the long term, right? Well, yes and no. Maybe from a trading perspective, you're getting to that point where you're like, wow, I really need to get out of this. And in our community, we actually bought it in here at 43. And the whole purpose of doing that was if we gap fill, it's going to cost me $3 as a stop. It was nothing to put this on. So I'm risking 3, and then now we're up 18. So I risk 3 to make 18, right? So, I'll do that all day long, because I'll do 6 to 1 all day long. Like, all I have to do is be right 25% of the time and I'll make money. Like, they're no-brainer trades. When you think like that on the relative risk versus return, your life gets easier as well, because you're thinking about it like, hey, does this have the potential? And obviously this has the potential to keep going, especially with all the instability in the world. But people really want the backstop of gold now, because they want that asset hedge, because they're watching inflation go higher globally, not just in the US. So, all right, cool. So we're watching this break out, but what does this have to do if we look on a relative basis? Well, that's a relative basis of gold versus the S&P. And as we can see from 2005, gold exploded. Well, that's not really what you have going on right now. So what I would do, or where I start with charts that look like this instead of sometimes using the cloud, is I'll just drop a VWAP from the peak and saying, hey, are we even over that level? And the answer is no. You're not even close to over peak July 11th level in here, 2011. You haven't even flipped that. Now, if you really want to get into this, which obviously we do, you can drop a volume profile from that level, and it will show you everything, meaning where's all the volume relatively speaking on this chart. And you're going to get a value high, you're going to get a value low, and you're going to get a point of control, right? And the point of control is where everybody's in at on this trade. And then the value high area is going to be the area where everybody is in on this trade. So are we at a level where everybody is in on this trade? And the answer is, well, on 16 on a relative basis, we were here. On 20, we are here, and I will blow this up for you. And so we can see this. Let's blow this up a lot more, actually. And so what is this telling you? The answer is no. On a relative basis, gold is not caught up to where the SPY was from April. Not even close. So in order for that to happen, gold can go a lot higher. Well, how many points can gold outperform? And that's when you just kind of look at this and go, well, gold can outperform to get back up to that level 15%, and to get to that value high level, another 17% of outperformance before I get back to these levels that were consistent over the past decade with being a relative area of, hey, maybe this is the area where this has gotten a little too goofy. Are you there yet? No. Why is this important? Because as the S&P goes up, and I don't think a lot of people are getting this, but you're going to get it right now. If I clean all this off and I just do the simplest of things and go, here's the S&P, and we'll clean all that off for a sec. And then what we'll do is let's turn this into a line, because it's easier to see with a line. And then we just go take a look at the gold for a second here as well. What's happening is that they're actually moving in tandem. So as long as this continues to happen and they move in tandem, which they are doing, you are seeing gold start to outperform, then you're going to be in a position here where gold can just keep grinding. And so when I say things along the lines of, hey, as long as this correlation exists and you're not near those higher levels, gold could just keep on grinding. And gold can consistently outperform for a period of time before it gets to that level. And so what we're really saying is that you're looking for about 15% outperformance. And then that might be that area where you're going to look at this and go, okay, this might be a little toppy. Now, when I ran Bitcoin divided by the S&P, and I looked at this on a monthly chart, I thought this was super interesting, so I wanted to share it. You can see your peak here in December. You can see where you're at here. I'm not going to overlay the cloud with it. It's pretty obvious that you're going to be above everything. But I do think it's super interesting to look at Bitcoin relative to the S&P and just note that this thing's just grinding along. Like, there's very, very little to say here. It is outperforming. A matter of fact, if we talk about these movements, and what I find so fascinating about them is when you just take a step back and look at things for what they are, and I like using the bodies, right? I don't really like using the wicks, because wicks are what? Price rejection. Now, I could do this on a weekly as well. But if you just look at this on a monthly chart, I mean, you're in a massive channel. and you just keep grinding. Now, maybe that comes home to roost, maybe it doesn't. But overall, if you are to look at how this is going, if you just took a step back from like October 23 when they stopped cutting rates or raising rates, apologies. So when they stopped raising rates and you look at where you are now, if you were long Bitcoin and short the S&P, you're up 200% from that date. It's just an absolutely fascinating statistic to look at and just go, wow, it's pretty impressive, right? And obviously you have your enormous move here in November when we had a change in administration. And so I think that is also something to pay attention. If we look at Bitcoin just on a daily chart for a second, it is very clearly forming this massive W. I don't think anyone doesn't see this W at this point. It's pretty obvious that you've come back down and retested this massive level, hit it, retested it, and you've been found to hold. I think I said 105 kind of was probably where the low was. I don't think we really got there. But if we look at this, and I pointed this out, and I think it's important, and Thursday, you hit your second highest close. Whenever you see the close, pay attention to the close. So then here you are on Friday, and if you look at this, you're still not over that close, but you're getting there. So I don't know how much is up here. I don't know how much this guy's got left to sell. Who knows? But you started to try to get up at that 125 again. And maybe that's your area, but maybe you're forming this base before you start breaking out. But this is telling you that we're going to grind higher. Pretty darn clear. I just want to point out that people tend to look at the foreign names, and they're really excited and giddy about the foreign names. I don't really get it. I get this, and I see it going higher. But when I tend to look at this on a performance basis, you have to drill into what's actually moving. And I'll show you what I mean by this. So this is the defense sector versus the S&P, and we're going to come back to that. This is foreign divided by the S&P. And if you want to go out there and put money into foreign names, and this is what it looks like, I mean, I wish you the best. And everyone will say, well, I need to be diversified. Yeah, you need to be diversified in things that are going higher. Yeah, you don't need to be diversified in things that are costing you money. I don't need to be diversified into that. That doesn't do anything for me. I felt warm and fuzzy before. This isn't going to make me feel warm and fuzzy. This is something that we've been talking about for some time, and it is very clear. Now, I had a position in this in March, and then obviously we had all that winning and liberation, and then I just got out of it because I didn't know how it was going to go when all of a sudden some of the alliances started getting a kind of iffy. But so for me, what I mean by this is I didn't really understand like how this was all going to shake out. I didn't know that we were getting a 90-day pause. I know they floated it, but I couldn't believe that you would do like that much damage and then just change everything in 30 days. But anyway, we'll go into that in another video. So for me, it was like, hey, get out of the way, preserve capital because we can always make money later, but we want to always preserve what we have first. Capital preservation is always first, right? We all know that. What are we seeing here? Well, we're seeing a breakout. Well, is this something that's coming to an end? And so when we look at something like the defense sector versus the S&P, well, if this was a chart, you'd be foaming at the mouth because now what you're doing is looking at an environment here where this is setting up to push. And we can all see this. We all know how to look at a basic chart and see that this is setting up with an all-time high close. If this was a quantum name, you'd have all the hoople heads on Twitter going crazy, talking about YOLO options into it because here we go. And I think that that's very important to get. So yeah, maybe looking at different sectors is a great idea. Maybe diversification outside the US is a great idea, but maybe it's more country specific. And if I have time, I'll get into some of that, but I don't know that I will in this video, but there's certain countries that are very clearly going to break out. And I think it's greater to look at those countries than to just look at the whole group. And I also don't think it's Germany that's going to be the one that does it, quite frankly. I think there's other countries. I think Germany can, but I think there's other countries there that people are not connecting the dots on yet. If we have time, I'll get into it. If not, I'll do it this week. It's why I always say subscribe. So we've gone through that. We've gone through this EFA, and I think you just have to look at these defense names. And to me, like people say, well, which ones? Well, go look at Rheinmetall, for example. Go look at DRS. Some of these names are they just look fantastic to me. And based upon the fact that Germany's now and Europe is going to come out and start spending more money, that's only going to be in an environment where they have to increase their GDP spending percentage on defense, which no matter how you look at it, is going to make that industry go up. And if that industry grows up and they increase productivity, that means more wage growth. More wage growth means, higher GDP, more spending. It's not rocket science. So I get asked a lot about China, why I'm not this huge China bull. This is 2008 to date. And so when I look at this, I don't feel that I need to be a bull on China. And when I look at the FXI, and I'm just going to take this out for a sec and look at it, I don't really feel the need that I have to go goofy in here and get involved in it. Now, I understand some of these names look fantastic, but what we're doing today is that 34,000 foot view down, right? Do I really need to get involved in this? Is this something that I have to get involved with? I don't really feel that way. And when I look at this on a basis of FXI versus the SPY on a weekly basis, and we only get to go back 20 years, but again, we'll do the simple things where, okay, well, let's just drop in the peak VWAP. I'm nowhere near that. All right, well, how about from '09? I'm nowhere near that. So you literally start going through these levels and just looking at peaks and go, well, what about a decade ago? Yeah, I'm nowhere again. Or how about here? You're not even close. So you literally have to go to something like in here in Jan 23 to even find that you're flipping a level. And then you'll find it if you look at it that way. But it's like, flipping January 23rd on a weekly chart and then holding that level, for me, is almost like this kind of, what is that, a moral victory? That you're like up, okay, like who cares? This to me is just so insignificant. Because what you have to think about is index sector stock. Like, where are you putting your time? Where are you putting your money? Why is this the one that you have to be so consumed with? You see, the one thing that people always fail to realize is not only is it your money, but it's your time, it's your energy. So why do I want to deal with this? And the answer is the majority of people, if you start looking at it, really don't want to deal with it. So why am I dealing with it? And that leads us really into things along the lines of what do you want to deal with? Because it's not just the US that you should be focused on. Aha, I'm glad you asked. So in front of you is AIQ. And if we look at AIQ, and reminder, the reason we're going through this is because now you know that, hey, maybe when I want to run some of these scans, I should be using a peak VWAP and looking long-term 34,000 feet before I get involved. Or, hey, maybe I should look at where the Ichimoku cloud is and how this is all playing out, right? Maybe that's something that you might want to consider. That's why we're spending time on this today. But where I'm going with this is going, all right, well, maybe I do want to invest overseas. And maybe I do want exposure to that because I don't like what's going on in the US and I think there's uncertainty and the government's shutting down and I want some diversification. Get the right diversification. Again, information, education. You should do what you're comfortable with. You should make your own decisions. No one should be telling you what to do and there are no gurus, right? There just aren't. They're just people that work really hard and figured things out. That's all. AIQ. So if you go global artificial intelligence and technology, anybody would look at this and go, wow, that's the cat's pajamas. And I would imagine they'd say it exactly like that, especially if they're cool. So then we could see this breakout and then you'd be going, oh man, I really missed this. Okay, well, did we really miss this? And the answer is we'd have to do the math and we'd have to take a look at that. So let me just get to this one before we go any further. And here it is AIQ versus the S&P on a monthly basis. And I'm going to use a monthly basis just so you can see this doji right here in that gravestone because I thought that was fascinating. And is the AI global sector up over the S&P? No. All right, well, when we're not breaking up, what we could do is the basics, but it's kind of silly to do the basics, right? Because we're going to drop a VWAP here and we're going to see how it rode the lightning for the past 2 years. All right. And then if we drop low here from this peak over, we're going to see that you're in roughly the same area. So I'm not adding a lot of value there. So if we drop the volume profile down here, we're not going to really get anything. Okay. So what's going to get us to where we want to be? Well, moving averages, they're all going to be aligned. So that's not going to get us to where we're going to be. So in situations like this, it's where I'll come in here and I'll throw in this cloud and I want to see what's going on. So I'm going to take this cloud and we're going to click all this on and we're going to just have to do this together for time's sake. And then what we're going to do is we're going to drop this to a weekly for a second. And then we just want to see how this is playing out. And what we'll note is that, yep, every time you get into this cloud, you bounce. And then we can see that these averages are pointing higher and that the cloud is actually expanding. So if you were to expect this to pull back, yeah, maybe it does have some kind of pullback associated with it. But at the end of the day, you are far from over exceeding where you think that you're supposed to be. You're not even close to taking out all-time highs yet. So when people keep saying these words that they love, people love these words. And whenever someone tells you this, just run away screaming. Whenever someone says, oh, we're in a bubble, did they ever predict a bubble before? Just literally just run away screaming because they don't have a clue what they're freaking talking about. No one is ever going to consistently peak and pick tops. And we're going to get into this in some detail in a second here. I'm trying to pack it all in, guys. There's a lot here. So there's parts of this you might want to go over again. But it's very clear they're buying AI, they're buying global tech. So if we wanted exposure to Europe, Instead of just saying, I'm going to buy the DAX, I'm going to buy this, you might want to look at individual countries. I'm not sure I'm going to have time to get into that today, but you might also want to look at certain sectors within those individual companies. Like, for example, if you started looking at your global exposure to the DAX and saying that's the way to go, well, what percentage of that is in AI? What percentage of the DAX is in something like defense? And that's going to tell you why you might want to be pulling these pieces out of it. Now, if we're looking at this, you can see very clearly this is your top, and you're not even over it yet. And people are predicting the end of global AI already, and we're not even at highs here. Now, how about uranium? Because when we looked at the indexes, uranium was absolutely running. And I want you to think about something for a second. I just want you to kind of wrap your noodle around this, because this is kind of a more of a deep dive statement. When we first came out with electricity, and electricity was, the cat's pajamas, as everybody, says these days. What does that really mean? All right, so you come out with electricity, they're running the lines, and everyone all of a sudden has it in there, and Rockefeller's all upset because why? Because he's selling you oil lamps. All right, cool. They have to run the lines. Everyone talks about how bad electricity is. If you go back and look at some of the old cartoons, you'll actually laugh about them, like how scared they tried to make people of electricity. And it's no different than how people tried to make people scared of uranium. And it's not like we haven't had problems in the past. 3 Mile Island, Chernobyl, clearly there's problems. Here's peak VWAP. And you can see how we've broken that peak VWAP. You could see where we've been in the past. And I'm not suggesting you're getting back there in a day. But I think it would be fascinating to go back and look at time on when some of these utility companies went public and how they traded before they became utility. And I think that's where this is going. I think eventually that all of these companies start turning themselves eventually not into growth companies, but all these companies eventually go down the line and become dividend companies, and they become utilities. That's where I think this is going. I think you're probably a decade away from something like that, but I do think that that's where all this stuff is heading. Now, this is where, to me, it gets interesting. If you look at this and you're like, okay, well, I don't really want to use the Ichimoku cloud. What else could you use? One of the things that's the easiest to use is just use a plethora of moving averages. So like the 10, the 20, the 30, the 40, the 50, the 100, the 300. And what I'm doing here is just dropping them on a weekly chart on uranium. And what you'll note by this is you'll see the movements. So you'll have these bands, and I'll clean off everything else so that you can see what I'm doing here. And you'll have these bands. So you'll be like, obviously the lowest one's going to be your 300. And again, you can see them all right here. And you can set this up any way that you wanted to. And you can find these online on TradingView, or just do it yourself. It's nothing crazy, but you're just looking at these levels and going, all right, well, what's going on here? Well, you're starting to align, aren't you? Where the 1, 2, 300-day moving averages are starting to curl up. And again, weekly chart. And all these are starting to lift, and they're starting to spread, which is exactly what you want. You want these things aligned and starting to spread. That's not how this ends, right? This ends with them rolling over, right? And you're breaking those levels. You're not really doing that. You can see the breakout here, November, December, when you broke above that level. You never came back under it. But I think it's super important to get that. You need these to kind of be rolling over if you're looking long term. And that's not what you're getting. You're starting to get this massive expansion into them. So I don't really see a reason to think that this is just going to slow down because some of these names get some speculative excess. I'm not saying it's not going to be a wild, wild ride. Yes, it is. But I do think you have to look at it for what it is and understand that this is another tool that you can use in your toolbox. And I think it makes a lot of sense. If we look at this on a monthly chart, you can just see how they're all starting to turn up, and they're all starting to start turning and how to lift and go from there. Remember, the Saturday videos are more of those broad-based videos that carry us through, and then we just link all this stuff throughout the week. And that's why I always tell people to subscribe. AIQ, we obviously already went over, and I just want to reiterate it. And I do want to go through some Tesla and some PLTR, but there's a couple things here that I think that are worth us pointing out before that we do. And I'm just going to start here. In front of us is the McClellan summation. And this is something I watch very, very closely because we're under that zero line. And when we're under the zero line, we're most at risk because this talks about breadth in the market. People keep talking about the breadth being worse. It's why when we started this video, we showed you what we showed you. It's not just getting worse. It's actually getting better. And we're starting to see the McClellan summation start to turn sideways here. And this takes a while to turn, which is why you look at the shorter term indicators, and then you come and look at the longer term indicators. And then you're starting to see this turn up for the first time. If we turn up and start getting through that zero line, and that's a big if, then you're putting in an area where you could start running. It doesn't happen very often that you do this. So this is definitely something that's on our radar and something that we need to pay attention to. In regards to individual names, I think the two most interesting stories out there were PLTR, and this story, I actually did a long trade on this on Friday, and did quite well with it. But interestingly enough, I mean, I had to obviously get out of it, but for the day trade perspective, but interestingly enough, the fact that they have a problem where they have flaws in their software is not the thing that people want to hear when they're doing this. So can this get hit? Yeah, this can get hit pretty hard. Now, usually you get some kind of bounce off of this. I would just point out that you did break the 12 for the first time in a very long period of time. All of September, you really were above that 12. Here's the 22, and here is your 55. You really, really don't want to break that. But this is setting up for some kind of issue. I would watch this super, super carefully. There's a couple more names here that seem to run into problems, and I think it's worth pointing out. If you really see this, the way it's setting up, it's not ideal. Let's get rid of that for a sec. But you can see you're kind of rolling over, but the divergence is there. I don't know that you're going to bounce right away on this. I think that usually what happens with this stuff is it's worse than we think it is, and this might be the tip of the iceberg. I'm still long this. I'm looking for some kind of bounce perhaps this week, and then try to figure out what I want to do. But if I could tell you anything that you'd want to watch more than anything is going to be the opening price of that, and then just watch how it acts. In regards to Tesla on the week, I'd be remiss to not talk about it, but you can see that you are clearly over an overbought divergence area here on the RSI. We had a great long trade into this and we reversed it and went short. I do think it's interesting. I actually am net long it right now. I did it on Friday, and I'll show you what we did very quickly here. So one of the things I really love about the community and what we do in there is the sharing of information, because let's be honest, I can't watch everything. It's not realistic. And what I want to do is I'm just going to drop a VWAP from here so you can see the pain point on where you're probably going to get to. That 438 would be the first area. And then from this one, we're going to just drop that pain point as well, and you can see how it acted there. But in this, it started coming out with news that you're starting to see an environment here where they might get some relief on U.S. production. Well, no one's going to benefit more from U.S. production relief from tariffs. The more production you do in the U.S., the better you are, than Tesla. And so on Friday, this presented a really nice opportunity where it made so much more sense because all the theta was out, time decay and IV was out of the options for the day. So it gave us a really good opportunity to make money into the end of the day. And to be clear, I rather show the timestamps. So the time volatility was out of this. Actually, I'm due to do like a trading journal. We haven't done one in a long time. I keep getting asked to do one. I'll probably do one soon. But anyway, if we look at this, what I want you to take from this is super simple. 425 calls, end of the day for $3. It was crazy not to get involved in this, especially if that news did hit and you could see that we were grossly oversold. You can actually see the divergence right in here, right into the close. And it just made a lot of sense to try this. My risk was literally $1. And then we also went out to the 425s of next week because the options were so cheap that it didn't make sense. I don't really need the expansion on them. It doesn't matter why, but it just made sense to do at the monies there. We were at like 424 when we did it, like right in this area when we started to really see it start to lift, like right in here. And then I closed at the end of the day. And we were up like 400% on them. It was like a home run. And I held the next week. So I am long into this. But the purpose of me going through this is a great trader. Now you're in day 2. Now this level's been holding pretty well. If you drop it on the 4-hour, and you just look at this, you're not really oversold here. Drop it like it's hot to the hourly. Yeah, I might lift, but where am I really going here? I think 440 is going to be a real issue in here. So key takeaways from names and where my head is, I think PLTR rallies up and then, do you get another shoe to drop? Remember with crowd, and you guys might remember this or not, but everyone's like, oh my God, like this is really, really bad. And then the thing got washed out at 180, 190, now you're up to 500. So you might get a moment like that where someone's like, hey, we have a problem here and this could expand, or it might be a one-hit wonder. And then it might just kind of go back. But usually these kinds of bars at the top of a chart, yeah, that's definitely an issue. I do think Tesla can bounce a little bit here, at least for a day. I think there's something out there where everybody's just way on too much one side of the trade. And I did see the negative news from California. It is a problem. The other one that's super interesting to me was HIMS. This really came in on the news of what Costco's doing. And I just still don't think people are getting this trade and truly understanding it. But there are some things here that should be concerning to investors. And I am long this. I bought it down in here off that 4-hour divergence. I'm still in it. And I'm looking at this and I'm getting that negative divergence in here and we did crack. So I'm going to need to see some kind of lift here But I don't really think the Costco news is that big of a deal. But what I think and what's going to happen are two different things. And finally, I just find this fascinating and I want to share it because I keep waiting, and they're going to laugh at me in the community. I keep talking about this secondary that's going to come on this name. Like, oh, they're definitely going to do a secondary. They have no revenue. Of course, they're going to do a secondary. And, you know, they're like tormenting me about it. Like, is the secondary in the room with us right now? But you're actually flagging on OKLO on a 4-hour chart. And this is really going to hammer home another point that I'm getting at, not only the index sector stock, and we're going to start doing more of this, especially in the free newsletter. And if you're trying to get into the community, get on the wait list because the prices are going to double because of some of the things I'm adding the new service. They're going to wind up doubling in January for sure. And I will try to get through everybody to get them on the list. So make sure you get on the wait list, but get the free newsletter too. There'll be a link in the description for that. I don't think people are doing enough research. And I saw this with ASTS. And this was something that we were able to get in yet again right in here, understanding what they really said the day that they said it. It presented a huge opportunity, and people will look at this and think that it's moved a lot. It has, and you're probably going to come back down to 61 and retest. But doing real research it's really paramount to what's going on out there. That is it.